Hey, good morning, Colin. Can you guys hear me okay? Can you see my main screen? Yes, okay, cool. Well, we got a good turnout this morning. That's encouraging. Okay. All right, guys. I'm gonna get started in a minute here. I'm just doing some housekeeping, so bear with me. It's early, of course, here. I just am getting moving too and getting some coffee. Hopefully we'll get some interesting action this morning. There's some news coming up that usually gives us a little bit of fun. So that's one of the reasons I scheduled this now. Okay. While I do that, um, I want to put something up. I was looking for this in the last session we did, the last meeting, and I wanted to actually have it in front of me when I talk about it. I mentioned this, but I couldn't find it quickly last time. All right. If you recall, this slide comes from the not even the workshop. It goes back a step before that, that how to be consistently profitable webinar. If you remember, that was the kind of free one I did for everybody that was interested. And I brought it back up because we're a couple of weeks in here and you guys have some meat on the bones with the material. So I wanted to stop and go back and make sure you were still in this mindset. What do you need to navigate this environment? The environment meaning trading, and eliminate the noise being furu thinking. And I'm still seeing a tiny bit of that in the chat, although most of you have evolved to the next step where you realize the nonsense there. But if you're still struggling at the stage of just getting, the idea of what's going on here, take a step back, and particularly with respect to kind of the Furu space, if it's not obvious to you yet, really concentrate on the fact that there's just no step-by-step magic way to make money in the markets, and people have been selling that shit for 30 years, 40 years, aggressively about the last 15 with Twitter and all. And, if you're still in that mindset that, you're going to build some kind of automated trading strategy that, you're going to turn your computer on and then leave for the day. If I haven't talked you out of that yet, then I don't know what to say. Seriously. Um, Within that, though, if you are starting to understand that there's no secret, there's no magic indicator, blah, 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 then what you really need to understand is how to adapt this to yourself. So step one of that is process, process, process. And I harp on this constantly, but what I'm really curious about, and I'm going to pause here for a second. You guys have seen mine many, many times, and I think you guys all understand it's always a work in process, and that I'm constantly adding and changing and improving it, improvising. And one example was just based on your feedback. There's really two parts to the Open Five, and that makes a reasonable distinction. If you understand there's the Open Five kind of price discovery, the initial part of it, which is the go with the order flow. And then later on in the day, there's often these kind of fades. Here's an example of one right over here. If you can see, that's really little, but I know you guys know what I'm talking about, where it goes back to that range and has some sort of behavior that is tradable. So that's one really simple example of what I'm saying here. I have this really mechanical here. This is not the trading part. This is being prepared to execute against what's going on in the market. That's the part where you need to be methodical and step by step. But if you're still stuck in the idea that there's going to be something on the dome or on the chart and it's going to tell you, okay, you get this, then you get that, and then boom, there's your trade. You need to make that a little fuzzier. And so I want to go through this again. the edge here for many of you is starting to form. All of you know what I'm talking about. If you've had aha moments, you're starting to realize where you went astray on your path to profitability. And for 99% of you, it's thinking that there's some secret, methodology indicator, something's going to show up on the dome and it's just going to scream, you should be short here. It doesn't work like that. You're learning a skill and that takes time. And so it's really important to focus on the edge that you have now. And the rest of your edge develops over time as you get more skilled. But many of you are starting to see, oh gosh, that tells me something there. And that is a predictable thing that leads me to a profitable trade. Guess what? That's your edge. You're starting to build it. So if you're one of those people, and there's at least a dozen of you that are actively sharing, keep doing exactly what you're doing. Because that is the right path to learning this stuff. If you're still trying to figure out, the magic secret, or you're waiting for that, I strongly encourage you to try to follow the path of the blank slate. That's obviously harder to do than it sounds, particularly if you have a fairly logical mind. But nonetheless, all I can tell you is I have no evidence in all of my years of doing this that that there's any other really good way to go about getting to the step where you're executing a playbook against your edge and you're worried about feedback. This is really where you want to spend your time, guys. And you'll notice that's where I spend my time. Something as simple as that little modification, I'm learning from teaching you guys. And that's the interaction and just looping over and over in this 3 and 4. I'm getting feedback and I'm putting it back into my playbook and making my edge sharper. And that is the essence of trading right there. There's nothing else. I just I get a little frustrated when that's not sinking in, but then I realize how hard that was for me to understand sometimes. But I do know that the way to do that is to clear your head. And avoid, just I was out on Twitter this morning just shopping the latest Furus, and I muted a few people, but some of these are just hysterical. I don't know if I have any good examples, but when you have some time, just cruise through like the ES hashtags, and you see all these people that have absolutely no idea what they're doing, but they're spouting expertise, and I strongly encourage you not to get stuck in that thinking, because it won't help you. Not in my experience. Okay, so we got about 20 minutes before we get a couple of news items to play with. So given that, we're going to talk a little bit about what's going on. And I'm going to do something I did a couple of times before, kind of casually. Absolutely, that's true, Amy. They sure do. And the sooner you realize that, the better. The only way, this is a self-discovery game. It's not about going out and buying a system. And anyway, so one of the things people have asked a few times is just kind of, I just sat down at my desk. I'm sitting here with coffee. What do I do? Okay, step one. The first thing I do is I go and look at the calendar. What's coming up? I mentioned that already. I've got 3 reasonably significant quote unquote news events. I always put that in quotes because it's most of it's nonsense, but you want the reaction. So we've got a little bit of Fed speak and Powell's still testifying, and then a little bit later, crude oil inventories. So we'll talk about all that as we get there. Obviously, we won't be all in this group for 4 hours, but we're going to get to see some of this. All right, so that's the first thing I do. The next thing I do is I just kind of go and get a sense of what's going on in the news world. I don't trade news. I just want to see what people are saying. This is a good tool for that, Teletrader. There's a bunch of news apps. I don't recommend paying for news. I know some of you do, and I think it's nuts. I did it 20, 30 years ago when, I was getting an advantage from that. But again, you always got to go back and think in this framework here. And getting news, from a $50 a month service or whatever doesn't give you an edge. Trust me, the market had it long before then. So, there's all these guys with breaking news here and earnings stuff, which is typical this time of day. And again, there's Walmart. All right, that might be interesting to see how that impacts the indexes. So Once we get going, there's some good places to watch that. This isn't showing the pre-market here on this. So anyway, so that's one of my kind of just getting warmed up things, get my brain going that I do, news, and just what's going on in the quote unquote Furu space and what are people saying. I've said this before also, there are people on Twitter who I know and I respect what they're thinking. And, you know, if they come up and I've kind of got them flagged here on my Twitter deck, that's, you know, I won't necessarily trade off that, but I might pay attention to it depending on who it is and what they say. Okay, let's see. What else do we need to cover here? What tool are you talking about? You're talking about the Twitter deck? Oh yeah, that's an awesome tool. And teletrader. I have other news feeds, you know, just Google and whatnot. Again, the idea here isn't to get news first. It's just to kind of get an idea what the conversation is. Because remember, we only care about reactions to news, quote unquote news. We don't care about, you know, what the conversation is about the data. You know, all people are saying, "Oh my God, that was a bad miss." You know, it's bullish, it's bearish. I don't care. I just want to see the reaction. I don't look at the sentiment around releases at all. It's totally a distraction. And yet there's paid services that, you know, tweet about that for $200 a month. And go figure. Oh, teletrader. Okay, yeah, teletrader is a good little free. They have a paid version too, but if we're just doing what we're doing, the free one is just fine. And it also has a nice little app. So, all right, let's put that back up there. 15 more minutes to that. Okay, so that's the first thing I do. Then the next thing I do is what I have said repeatedly to you guys, which I just call context. And I start with the ES and I have a look. What's going on? My gosh. You know, if you're looking for evidence of consolidation, I guess we need a little more days there if we want to see that. But let's do 30. But most of it is pretty obvious. Wow, if you go back 30 days, it doesn't even change that. All right, well, you know, there's no doubt what's going on here. We're consolidating in an uptrend. And reminder pop up there. And the Renko, you know, pretty much confirms that. There's no resistance, quote unquote, above us because we haven't been above us. So, you know, the only thing you can do here is watch this consolidation and see how it plays out. There's a huge gap under there, which probably will get filled at some point with some volume. So that's worth paying attention to. But other than that, you know, the context isn't telling me much. One thing interesting here, the one reason I use the ranges, and this might be a good little kind of get a sense thing that you may not have heard from me before. I've mentioned it, but not a lot. Is just one of the things I look at. One of the reasons I have the ranges on here on this chart and I convert it to lines is I want to see the behavior around the first hour high and low. So here clearly we were selling it, and here we were not really doing anything, just a big mess of consolidation. And then it's starting to look like, you know, we certainly want to challenge the top end, which is the thesis. So, you know, keep that in mind, but don't get married to it. You've heard that before. Okay. So that is what's going on in ESDM. Let's see if NQ looks similar. It usually does, but you never know. Sometimes there's something slightly different, and in today's an example of that. What's slightly different? Well, NQ, and this is something about, I've said about it over and over again, and this is a really good place to kind of keep it in mind. NQ is really rangy because the way it trades, you've all seen it. So it tends to go whoa, one direction and then hang out and then go whoa, all the way back the other way. And you're seeing that kind of intraday, you know, between the days, you get these wild swings. But the essence of it is that nothing has really changed. Well, we're doing that again up here. So that's one of the reasons I like that range trade so much that we haven't gotten to yet, but you've heard me about it on and off is, you know, as long as you don't get married to ranges, you can make a lot of money just, you know, keeping them in mind. All right, so that gets us kind of what's going on over there in NQ land. And it's consistent with what we're seeing here in the indexes, which is we're correlated, we're all down a little bit and nothing significant. So, you know, you always want to keep an eye on correlation. I have not really mentioned that other than in passing, but things tend to move together or in cyclical waves. So, you'll see money move from one index to another. A lot of that's just arbitrage that, big players are doing. What that means is, there are correlations I've shown you between the indexes, and when we start to get away from those, everybody puts money into getting us back to them. That part isn't the tradable edge, but what is the interaction between the prices on the DOMs. And maybe we'll get lucky and see some of that today if we get some correlation, but and get moving. Anyway, so that is what's going on over there. Now, just for fun, let's see what's happening in the gold and oil patch. Okay, so here's oil. It's going to be the first one to get busy usually this time of day. So, gosh, air pocket. Can you say air pocket? Look at this. Anything below that low, and there's a lot of room down. A full, gosh, 56.20. Remember, guys, if you're not an active oil trader, it is the hard one to do, but points are $1,000 here. I mean full points, like 56 to 57 on one contract. So, if you have an inflection point, it's not a bad idea to try to ride it with a one lot. That's why most of my action in oil is momentum. And up here, I'm kind of looking for a spot to potentially get short just because we've been up here so much. But that doesn't mean a breakout isn't possible. So this is a really interesting giant range of tradableness, for lack of a term. I mean, there's 2 full points in here. So that's definitely something to keep in mind today. And, I don't know if it's going to develop into a trade setup, but it's definitely an interesting set of price action data points, which is what those are. Okay, now let's take one more look. And that's gold. Gold's been pretty crazy. It's had somebody posted about this, I think it was Darren. It's had some just huge ranges, and it's had some pretty tradable moves. Remember, this is the Renko, so it's showing trending, and there's a couple of spots where we had some really significant down moves. There's my reminder. I told you these are really good habit to have, and it's trying to kind of hold that low and this consolidation area. So this is just all good here. I have no bias whatsoever as to which direction it might go, but it certainly looks tradable. And, here's those big giant ranges playing out. So, the open 5 on a couple of days here was really predictive. Just get the heck in there and hang on. This is momentum. So, it's one of those things where you want to get your stop between you and your trade and just let it go and see what happens. So maybe we'll get one of those. Okay, so that's kind of how I look at the big picture, and I also have this equivolume view over in Thinkorswim that is useful as well. These aren't regular Bollinger Bands on here, guys. These are the VWAP ones, and again, most of my work is around volume, so that's kind of gaming volume a little bit for me. I don't use those as a trading signal, but I use them to kind of see where we are in standard deviation volumeness. So, basically I'm just taking the range of the volume and the standard deviation either way on it. So, the net of what we're seeing here is there's not a lot to work with. I mean, there's a lot of sideways here. There's the movement in oil we talked about a minute ago and the movement in gold. The indexes are really boring. So there may or may not be something there. Not unlikely or not unusual to see that when, we've got news coming up, and now we're 8 minutes away. So good. All right, so that's, I've mentioned this a couple times, but I used to spend hours at night prepping for the next day, and you just saw everything that I do. We're done, I'm prepped. And that's just such a huge advantage over the way it used to be. I can't even tell you. Okay, let's see if there's any comments of interest. Yeah, just under what I'm doing is I'm just getting a sense of what the world is like right now, and it's the easiest way to do that is just kind of take a step back. People sometimes say it's the 10,000 foot view, or whatever. You're not looking at individual trading opportunities right now. You're just getting a sense for what's going on a very global scale, and this is a good thing to do with your brain first thing in the morning. Notice how I have no bias whatsoever. I mean, just I'm waiting to see what the market's going to give me. And particularly, I'm interested, as I've said from the beginning, looking at the charts and looking at the action. This is one area over here in gold and oil that I certainly want to pay attention today. Maybe fading a pop up in oil if we get it. We'll see. And gold, gold, I keep thinking, the way that old traders, Jeff, used to think. And here, let me grab the 5 minute for gold. Because it just keeps seeming like this has just got to be the long of the century at some point, but it has yet to fulfill its promise. A couple of times the last few days, I felt like that. I said, God, this is going to be a great long. Here's another, and I get something out of it, but it just doesn't. I'm thinking, it should be up here again. That's the trouble thinking about price levels. Is the market right now is telling you exactly what the value is. So think, we should be bouncing more. It isn't going to get you anywhere. But one of the things, you will notice things the more seat time you have with an instrument. And with gold, I said this back a few times just in passing, but gold hates the teens. And anytime 14 or 15, and then it gets up into the teens here, 10, 11, 12, it always gets sold. And I have no idea what that's about. But, and then once it gets through the teens going the other way, it stops doing that. And I don't know what that is. I've seen that for a couple of years. I do not have any idea what's behind that. And you know what? It really isn't that important what it is. That, again, that's that, who cares what the cause is as long as you can understand how it impacts you and your edge, right? So it's hard to burn that into your brain. It looks like there must be something really significant that goes on in the teens, but I have no idea. I literally have no idea. Okay, let's see. Okay, seeing some good comments here. And, I don't have like a set agenda that we're going to go through. I do have a few things I want to say, but I'm kind of killing a little time till we get this first batch of announcements that are going to be in about 5 minutes. So you know what? I do want to tell you something a little bit about when you have PPI and jobless claims coming up, those tend to get faded a little bit. So let's watch the price action. And you know what else I'm going to do? I've been asked a bunch of times about what I'm looking for on here. And I know, don't want to harp on that, guys, but the more time you look at it, you'll get it. But I will just tell you a little bit about my thinking process at this time of the day. Again, I'm collecting information. What does that mean? Go back to process. Okay, where are we? We've covered this. I've got my head clear. I'm reasonably pain-free and everything else is had some sleep, had something to eat, we got coffee, we're good. Okay, context. Trend day, no, there's nothing going on that implies trend or flip. We haven't moved enough to flip, so that can't happen. Profile structure, we just did that. Boundary prices I like, okay, that's always there because that's a good one to just stop and think about it, okay? What do I like? Well, let's have a look over here. Oil's got a nice little range. So, it likes to break out and this is pretty symmetrical. So if oil got up in here somewhere, 10, 20 ticks above that on low interest, these numbers being low here, I might fade that. Do I want to buy it down here? No. And that's just right now, I feel like oil has been pushed. And if anything, it's going to get sold. And that's just my personal sense of the market. There's no sum or evidence to convince me of that. It's just my gut. And you learn to trust your gut after 46 years. Don't use a gut when you don't have one yet. Some of you else, I'm going to call out one person did this. I won't name them, but if you look at the chat in Slack, you saw it. They were like, so I took this trade. What do you think? And I immediately jumped all over him and said, what setup was that? And, luckily he immediately caught himself and said, you're right. I don't know what the hell I'm doing. So that's a really good example of, at this stage, if you think you have some other setup in your head, unless you can develop metrics for it, don't use it and stop thinking that way and just play along with the class here. You will get better results. Can I comment on OpenFive A and B? What's the difference? Yeah, it really straightforward. That's a result of you guys not understanding the OpenFive. The A is the first part. That's what I've always talked about, this, you know, market order, jump in with the order flow and just let it play out. And that's the often, you know, very wicked moves that we get right at the open. And so what's an example of that? Here's one right here. You know, you just got, I mean, look at that candle. On a 5 minute, you had no idea. It was too late. That's why the 5 minute isn't the trading chart. But I'm sure if you were looking at the ticks or 30 seconds, you would have seen that energy and gotten long. And, you know, and then it pulled back. But that first trade is really just about the imbalance. Remember, you know, when we did the open 5, I put that description up and I said, you know, that you're jumping on imbalances. That's the first part of it. And, you know, you'll feel them, they're there. And if they're not, they're not. And then later on, when we come back to that range and test it, you know, like when I'll say there's a short off the open 5, there's a couple of examples over here, or there's a long off the open 5. That's what I'm talking about. It's coming back and playing the range. So that's the B, is the idea of the range that was established in the first open. Okay, so that is the answer to that. I hope that clarified, Bauer. Okay, we should be just about ready to get some news in quotes. 2 minutes. Feel free to shoot any other questions if you have them. So what happens when we do get news is, and I don't care what the numbers are, they're irrelevant because I'll let the market tell me what they mean. Don't, you know, look at them as being bullish or bearish. I know people try to do that, but let's just let the market tell us. So in other words, what those numbers are, and if they beat or didn't beat, or they were expectations or any of that, I don't care. It's so good to have stuff I don't care about. Okay, so whatever the forecast is, I don't care. All I want to see is the reaction to what the actual number is. So let's see if we get one. And then if I decide to trade it, I will tell you what I'm doing, or I'll try to tell you. I might do it and then tell you after the fact. Don't try to get in front of these things. I know people that do that with options, you know, like they put an order way out down here and way up here. That's fickle, because if you do get a really big move and it turns out to be for good reason, what that'll do is trap you. You're better off interpreting what happens than trying to, not really. IPOs are controlled by a limited audience of folks. And rule number one, Trader PD, under no circumstances ever should you participate in buying an IPO unless you're a principal doing it into the initial offering. You know, you own stock, you're a VC, but absolute lunacy buying any offering at the IPO. Total, just you are being the fool when you do that. So I hope I made that point clear. But no, the similarity that you're seeing there is the price discovery, but it's not a tradable edge. It's because there's people that have advantages that you don't have. They know what you don't know. Okay, I was buying at a trading firm, your job, but yeah, okay, yeah, I hear you. Hey, I'm a minor insider in Uber, and I had the opportunity to buy Uber pre-IPO at a slight discount, and there's no way I would have touched that. It's just, you know, I mean, everyone who has Uber stock at any level, I mean, the founder, Travis, everybody is trying to liquidate because, you know, it's just the business model doesn't work. So, okay. Well, we got our news and there's not a lot of reaction to it. So, and at this point is when I'll go back and see what it was. Okay. Well, that's part of the problem. It was pretty close to expectations. So that's that. All right. Well, sometimes you get something there, sometimes you don't. Also, another thing to keep in mind, guys, excuse me, sometimes you get something a little muted, like, you know, the market will do nothing like this for a minute or two or three. And then guys will start to push it. And what's happening there is a little bit different. What those guys are doing, those are the people that were waiting for the news to clear to put on trades that for their edge. So the news is an aberration if something moves the price. So now that we're clear of that, there's really nothing between now and the open that will impact price from the external. So now it's just pretty much the auction, and that's that's how everyone will start trading it. And you'll see guys like do this stuff, you know, throw a big bid and a big ask. I'm sure that's the same guy. It went on in exactly the same second. And he's trading the spread. That's what he's doing. You know, here's the middle of the range up here. Here's the bottom of the range. There were some buyers down there. So he's going to push it up and then he's going to sell back to himself and take profits. And here's what I'm watching on the dome for Samer and you guys that still aren't seeing it. I'm just looking at the buys versus the sells. And right now, they're supportive buying. They can't push the price down, even though there's been a couple of big blocks of sellers. They're not getting anywhere. So if I just clear that and keep the totals over here, again, I'm seeing the buying and they're lifting the ask, but they're also playing the spread. This guy's demonstrating that he's supporting the price down there. That's why he's throwing up that big bid. He could be nonsense. He might not. You never know. You don't care. Just be mindful that he's there. Again, same story here. Who knows if it's the same guy, but when you said that, both those orders went up at exactly the same second. And typically that's somebody playing a spread like that or a group of people doing it. So just don't get in front of those things and don't think of that as, you know, some kind of protection from it moving this way or going down. It's not. Those will disappear just as fast as they appeared without filling or with filling. And again, it's not as predictive as a lot of people will try to get you to believe it is. You know, somebody said something really interesting and I want to call it out because it was so good. Is she here? Yes. Okay. Maria said something. We'll talk about imbalances in a second. Maria said something in the Slack that I encourage you all to read. I posted it as an announcement because it is exactly the right description of what goes on in dome order flow. It's instrument dependent. These are her words. It is time of day dependent. It is conditions to blah, blah, blah. Exactly. All of that is right. And the point is that there is no mechanical way to read this. You just have to stare at it until you learn what you're seeing. It's that simple. Okay, so how do you look for imbalances? I just described it, Bauer. See this I didn't reset, and that's a positive number going up. And look at the buying. Okay, they are lifting the ask, and the sellers are not stepping up, so it just keeps going up. And so I'll recenter it, and maybe I'll clear the currents. But again, this number, as long as this number is going up or not dropping below zero, and we're pushing up, then it's getting bought. And see, now he just moved his bid up. It's still getting lifted. Again, you know, this kind of action is real predictable. It's not tradable for us, but you can see what the traders that are trading it are doing. They're trying to work this little tiny range, and so far successfully. He's managed to push it up quite a bit. I mean, go back and look at the LRCs and look at the tick chart. Okay, this was kind of the inflection point here. All the sellers kind of washed out, and we started going back up. And remember, this LRC pattern, a smaller one inside of a longer one, both facing the same way, is pretty much the strongest kind of form of upward momentum you'll see. You know, the slope of this one could be sharper, but you know, the last thing you want to be doing here is fading this. It has a bid, and that's exactly how you describe this. It has a bid. You know, forget words like absorption and bid and all that nonsense and imbalances and auctions that are finished and unfinished. And what is happening in English? What's happening in English is somebody is pushing the price up, and now there's a tiny bit of selling coming in. Notice how this guy's much closer to the current trade. So this kind of whatever was going on here is starting to unwind. So that's what I'm seeing here and nothing else. There's no edge to it. I saw some buying that was the bottom of the range, and now he's starting to take his foot off the gas, or who knows, you know? All right, so let's see. This is what you were asking for. I know it's what you're asking for, Samer, but if you're Maria, you're going to get farther because she's looking at it from the right point of view. I'm harping on you because you're trying to get mechanical answers to something that is not mechanical. It's human nature. This is just fear and greed playing out. So it's an art. And also you can read too much into that, by the way. The 110 is an ask limit order. This one, the 112, yeah, that's what big limit orders look like. But again, we don't care really about orders because unless that guy actually fills up there, it doesn't mean anything. These two people right now, or this may be the same one. This is posturing. They're trying to show that below here, they're buyers, and above here, so I want to sell down and buy up. That's what that guy is saying to the market. And so far, his trade is working, or them, whoever it is, doesn't matter. The point is that you want to watch the individual action in that range. Notice how this isn't, if you tried to trade this to a tick or two, you'd get slaughtered. You just can't do it. You got to think of it as a range. So, you know, the range we're talking about right now is 53 down to 48. That's where that guy is quote unquote providing buying support, and this is where the selling quote unquote is. Now let's see if it happens when we get there, but that's a general guideline. And see, this is interesting. And again, this could be him doing this. That'll disappear and the bottom will fall out. You know, you got to just kind of watch the game and realize there's thousands of players with all different kinds of time frames and objectives, and so it simply is not possible to look at this and say, step one, you see 24 here and it has to be 4 times greater than how many are over here. No, you can't do it that way. What you can do is see overwhelmingly selling coming in here. See how they're dropping the bid and they're pushing it down and it's getting sold and nobody's stepping up to buy that. Remember I said that guy's going to pull out and then the floor is going to fall. Well, guess what? You are seeing it. So that's how you can use order flow to predict. And that's your edge right there. Okay, I just gave it to you, Samer. It's that simple. It's not crazy how I saw it, David. I saw it because I've been staring at it for decades. And I understand not that 79 is 10 times greater than 5, okay, or 20 times greater than 5. I can just see the sum of the energy, okay? And look at that. I mean, I couldn't have asked for this to be more. This is almost like it's straight man. I'm telling you what to do and it's doing it for me. But the point is, you get it, okay? I can just feel what's happening. And it's not because I'm a genius. It's because I've spent a lot of time staring at it and I understand what's happening. I feel the intentions and the fear and the greed of the traders. And looking back on this point here, remember I said if that gets filled, that's really important. You could have entered right there short because that was clear that that was no longer supportive and we fell right through it. You could have made your day right there on that one trade and go back to sleep. That's it. You're done. And notice how there's no mechanical method. There's no system. I can't give you step 1, step 2, step 3. I can tell you just stare at the order flow and get a sense for what's happening. And you will. It's that simple and that hard at the same time. Okay. And, you know, if you go back over here and look at the LRC, you know, for those of you working that, I remember, you know, a minute ago, what I was talking about with that, how it washed out and was coming up and then we had another one. And these are real easy to jump in on the momentum trades. If you see them coming, like right in here, get short. You have nothing to lose. Your stop is right there. You're entered here and just write it down. You know, if I was in this trade, I probably would have started getting out of it right here. But you know, if I had multi-contracts, I'd probably keep one maybe. I don't know. Hard to tell. See what that does. But that's kind of the thinking. All right. So the purpose of this session is to kind of put it all together. Now you can see why I focus on the domes. I don't need a chart to sell me this stuff. All I need to do is watch, and it's still happening, by the way. That number is now negative, even though I've reset it a few times, and we're pushing the lows. And again, you're starting to see buyers come in and say, you know, we intend to buy down here. Yeah, right. Okay, we'll see. Maybe they do, maybe they don't. Again, so much of this is posturing. It's, you know, imagine a bunch of roosters walking around in the chicken pen, you know, strutting their stuff. That's what everybody's doing. This could be an interesting long play here. I'm emphasizing telling you what I'm seeing rather than clicking my buttons and doing trades here. But, you know, clearly we had at least 2 opportunities to get short here, and we would still be short if we were trading multiple contracts. If I was just trading one, I would have taken profits because, again, you know, 3 rules. Trades work right away. That one would have. Number 2, always take profits. Yeah, it's not moving anymore. Get out and don't lose money. And there's no way this trade could have lost money. It just, we saw the setup, you know, we entered, it did what we wanted to, we're out. That's literally, that's it. I mean, you couldn't have gotten a better example at 5:30 in the morning or 5:40 in the morning in California. And what's this look like over here? Well, duh. You don't need the chart to tell you there's overwhelming selling and the volume's picking up. That's why you read the dome, Summer. It's all right here. It's happening right in front of our faces. We're watching. Look at the sell volume versus the buy volume. I've reset this now 3 times and it just keeps coming up negative. Now, that means we should go down. If we stop going down and that keeps happening, that might be an indication we're going to wash out like we did back here, and we're going to reverse again. So you're constantly not taking a position in your head as to what's going to happen, but what you're doing is constantly gaming. You're thinking in bets. Remember the book? I'm saying to myself, what are the odds here? Well, everyone's thinking we're going down, so a bounce up could stop a whole lot of people out. So it's a really interesting play long from that point of view. And, it's moving down and it's getting sold. So, the obvious one is it's a short. The trouble with that is just, getting in on a move like this. You can chase it, fear of missing out. And the next thing you're upside down in it. So would I enter right here? No, I would not. It's just, it might still be a great short. It looks like it has really strong momentum. Again, when these two are parallel with the same slope, one's inside the other, that's the direction you're going. But you got to watch out for these. And there it is. There's your turn. You could literally do that. And it's not necessarily a great idea, but I wanted to show you how you can trade momentum. And we're trying to get a stop under this. So as soon as we can, we're going to do that without, just giving it away with a tick. So, and if it starts to go the other way, I'll just flatten it. So I suppose you could put it on break even, but again, the NASDAQ, you can't. It's just too choppy for that. So, I want to get it up a couple points and then get a stop under it. And I don't think I'm going to get a chance to do it. All right. So we've got it at break even now. And there's a tick. Okay, there's your 1 tick drill, guys. We locked a tick. Now we've got 2. Come on, that's the ask. It's not going to let me do that. Come on, move up, move up, move up. I want one more. Boom. All right, so we got a tick. Anyway, you see my point, guys. That's the 1 tick drill, and that's the concept of reading the dome. Okay, I'm going to pause and take some questions. Let's see. Lee Harris, the changing numbers you're talking about. Michael, wait a minute. Okay, hold on. Let me answer questions, guys. I know, help each other out, but let's see. Yes, okay. Might be a lure in CL. All right, I'm not talking about CL right now, so let's skip that for a moment. Okay, there's another one of my reminders. You can see how those work. Okay. Cool, thank you, Colin. Okay. No, God, Sommer. Will you please listen to me? I'm going to stop and scream, guys. No, orders are not potential inflection points. Orders are people trying to make you think that they're potential inflection points. If they become one, then that's fine, which is what we saw. But do not assume those are real, because 90% of the time they're not. Do you understand me, Sommer? I'm speaking directly to you. Okay. Delta number above the profile. Yeah, Jury, that delta number is a jigsaw thing. And what it is it's the total net at any given moment. So when I reset the currents, it doesn't reset. When I reset everything, it does. That's what that is. Yeah, it's one of my favorite things. It's an instant footprint. It's a really cool jigsaw feature. I love it. Other platforms do something similar. I'm not going to comment on that. Dark blue numbers to the right of the dome. Okay, Bar, I'm not looking at yesterday's range this time of day. I'm just looking at momentum. That was a momentum trade. I was just demonstrating to you, and I was demonstrating to you how to do the 1 tick drill. That's literally what I was doing. Okay, and I don't care what the results were. This isn't about how much money I made on that trade. It was showing you price action. You guys should know that by now. I think that is what I just said, the delta. Okay, you guys have to be on the same terminology or I'll have no idea what you're saying. So one more time, okay, on jigsaw domes, the first 2 columns here that I just reset, those are called current trades. Please refer to them that way. These over here are called total trades that I just reset those 2. So we have orders, price, current trades, total trades, okay? Use that nomenclature, please. No other. Okay, and then this is a delta of the total trades real time. Are we clear? Does everyone understand what we're looking at? If you don't, please type a question. Darren, yes, now we're at the bottom of the overnight profile. Okay, at this point in the day, I am not looking at any ranges or anything. This is the open I'm starting to game. I'm not trying to trade right now. And I recommend generally you don't trade this time of day. This is getting ready to get rich at the open, guys. This action should be for you, should be what step? You all should have this really clear in your head right now. What is it that I'm doing? Anybody? What's this right here? That's what I'm doing. I'm collecting information. No, it's not prep. Prep was what I did at the very beginning, Colin, where I just said, here's the range, here's the Renko, that's it. I'm collecting information. I'm not ready to apply it yet because I don't know enough. So, you guys are always chomping at the bit to get the trades on, and that's the wrong answer. The correct answer is to get knowledgeable and polish your edge before the open, and then let it rip. Okay. Okay, I'm just reading that. Okay, I don't see any other comments we need to talk about right now. So, hang on one second. If I'm going to be able to actually try to trade, I need to clear all this stuff from Zoom off of my screen so I can just watch a longer time frame and your questions, and then I should be able to try to. Okay. Trades or contract volume. Okay, I've seen this a couple of times and I'm not sure what you guys are trying to ask me here. Okay, let me reiterate, okay? Everything in Jigsaw, and your order flow platform should be the same, is about actual trades that have gone down. I do not care about orders. If you're looking at a standard DOM in Ninja or whatever, all you're seeing is orders. You're not seeing this other information. If you have some sort of order flow DOM, then you can get this stuff. And again, I'm gonna clarify something here because there's still conversation going on about it. A trade could be 20 contracts. Okay, I think I get what you're saying. Yeah, I will refer to collective behavior as a trade. Yeah, it could be 20 contracts. It could be 20 people with one contract. It's the collective that I'm referring to here, okay? It's the volume, yeah. I don't care if it was 1 or 2 or 3 or 10. Remember, the only thing we're concerned with in order flow trading is what everybody's doing, what any one individual is doing. And again, Maria nailed it. If you look over in the Slack, the one that I put into announcements, it's really as simple as this. And I'm not even gonna, I'm gonna make you go back and read it, guys. This right here and this from Colin, these two. Go read them on your own time. That's the essence of what I'm saying here. Now, there was something else I wanted to go back and explain. Okay. There's been some discussion again, and over and over, you're going to hear me say this, guys, do not get married to terminology. There's a constant running debate about whether we're seeing market orders or limit orders. Okay. Clarification. Every single trade has one of 3 ways it can go down. Forget the orders. We're talking about executed trades. The market, the CME, matches trades the following way. You either have market orders matching to limit orders. So if I am a market order to buy, I am matching somebody's limit sell order, okay? That is not a market order trade. That is a trade. We don't care that a market order hit one side or the other. We only care the side it's on, okay? Then there's the other way around. You could have a market order hitting a limit order the other direction. Again, whatever side it executes is all we care about. Critical point here, okay? I hear this a lot. I hear people saying that, and it's correct to say, Lee clarified this on one of those conversations, that market orders move the market. Yes, that's true, because market orders are going into the limit orders and taking them out, and we're going up to the next level. We just saw that going on. But to get some belief that there's a distinction between limit orders and market orders is just constant misinformation. And I see it all the time in order flow discussions. We're concerned with every trade. Every trade by definition is at the market. The market is whatever it is at the moment. So right now, this is the market. We're trading 42 by 42.5 and trades are filling a quarter. Okay, so does it matter that as we tick up, we're filling into somebody's limit ask, and as we tick down, we're hitting market buys? No, it really doesn't. Yes, that's true statement. But for those of you that are new at this, getting caught in the minutia like that is one of the reasons you're not able to understand what's happening. And so stop trying to think of it that way and just look at it at what side they filled on. That's all that matters. One other piece of that, if you're using a standard tape like in Thinkorswim, and I noticed a few of you were doing it, like, you know, where they have time and sales. I don't have it on here, but it would be next to one of the charts. That's not going to give you the correct order flow. You're going to be backwards. And I've said this a couple times, and most of you don't understand what I'm saying, but order flow traders look at trades on the bid side as being negative or pushing pressure down, and on the ask side as being positive because that's pushing buying up. Traditional platforms like Thinkorswim or, you know, name any other stock market platform, the tapes from those are going to be the backwards. They're going to be the other way around. They're going to show stuff on this side as green, buys, and that's wrong because they don't understand order flow. So make sure when you're looking at my tapes, my Jigsaw tapes, understand that they are Jigsaw automatically flips them the other way around and it reverses the colors because that's the right way to do it. Okay, this is a really important point, and I'm not sure many of you understand it. So I'm going to pause here. Does everybody get what I just said about trades at the market? And, you know, yeah, limit orders are relevant, but at this point in your education, ignore it and just watch where the trade goes by. And make sure if you're using time and sales, that you're using one that's actually getting the right color scheme for you. The traditional platforms will have it backwards. The other thing that they do, like Thinkorswim does, is they consolidate blocks. So you'll see a block go by and they'll say 50, and that's not a 50 in the sense that we're seeing it in Jigsaw where it was one trade that filled. What you're seeing is them just consolidating the tape, which the CME does for people like that, for platforms like that. So basically, if you have a tape running in something like Thinkorswim, it's useless. Don't bother. Okay, am I clear about that? Does everyone understand that? I saw a few examples in the Slack of people posting just standard, you know, toss tapes, and they're wrong. Okay, so I know most of you get that, but if you're one of the people, make sure that's really clear to you. Okay, so let's get back to what are we doing this time of day. Again, I tend not to trade in this time of day unless, you know, there's a big move going on in oil or gold, which a lot of times there is, but today we're not getting much. At exactly 6 o'clock my time, that's the old pit open for oil. So we will see a little flurry of oil activity, and so just for fun, we'll bring this over and see if we can pick off an oil trade here. It's dead center of the range, so that means everybody agrees, which, you know, translation for us means there's no edge. So it's really hard to make money doing that. But okay, so here's a good example of what we were talking about earlier. Is this guy really planning on selling 178 contracts up here? Who knows? You know, it's a high volume node, so maybe there's a bunch of people thinking they're going to sell it. It's probably a fake because as we move up to it, you'll see it drawing in sellers, and then a lot of times when you see those, suddenly that'll disappear and we'll pop above it. So again, be really, you know, suspicious whenever you see that, because if a guy really wants to sell those up there, you know, why is he advertising it? Why isn't he being a little more stealthy? You know, and the point is, guys are trying to suggest here that everyone should sell. That's why they're posting size like that, and they're saying, you know, well, down here we might be more interested. Again, there's so much deception with orders, spoofing, blah, blah, blah. So just a grain of salt. They're not support, they're not resistance, they're not potential inflection points. There's somebody trying to game where those might land, and they may succeed, they may not. That's it. Okay, big aha today. I love that. Good. What is it, Michael? You want to share real quick? While we're waiting to see if he does, I will 3 minutes on oil. Okay, look at that. See, whenever I see a big ask and buying coming up toward it, I always get suspicious because it just 9 times out of 10, it's a smokescreen. Okay, the guy with the heavy order and CL might be absorbed. Oh, here we go again, Sommer. No. Why do you constantly try to figure out what's happening and who's doing what instead of just doing what I'm showing you, which is be mindful of it. And beyond that, there is absolutely nothing to be learned by that. You're trying to predict what's going to happen with the 2 years of experience you have. And I'm telling you, you're wrong. You're going to be wrong every time you do that. Okay, the Jigsaw Dome is the one also watching the action around the inflection. Okay, cool. I get it. Yeah, Jigsaw's domes are really useful. And particularly, I told you I spent a lot of months configuring these things to the way that I wanted them. And, this kind of minimalist approach that I ended up with, I really like. But, again, that's part of your Bubba. You kind of have to make that your own. All right, so, there's just literally nothing to be seen here other than, we have a bit of a bid. And you can always see that a little bit better if you zoom down. See, so selling peaked here. And ever since then, we're on the buy side, although not overwhelmingly. So let's see what happens when it opens. Other than that, I don't really have much to say about it. Cool, thank you. Yeah, a couple of people, Michael, have asked me, when I do the resets and how I do it. It's just totally based on what I want to see at the moment. Like, I want to see if this buying continues, but I want to see the current trades. So I sweep the current trades and I leave the total trades there. And, again, this is just cool stuff Jigsaw does. The way it does it, I like it. Doesn't mean you can't find your approach in Sierra or anywhere else. And that's part of that message. Don't marry the tools, guys. It's a super great Jigsaw feature. I like it a lot. Pete designed Jigsaw for prop traders based on his experience with them, and he literally did it on a napkin. And it, I think he really nailed it. But and again, with respect to the configurability, it's a toolbox. It's not, a trading system. And that's why it's so useful. It's tools, and you adapt the tools to your edge, and then you use them, and that's how you do it. Is trading like I do the closest you can get to pit trading? Yeah, Darren, that's a really good question and answer. Trading in the pit, there's oil. Okay, and let's see if that guy in fact is real. Yeah, in the pit, you got a real sense just by the noise, for example. It would get really loud when there was momentum. You could literally close your eyes and just buy and sell based on the noise. And I think, order flow gives you the closest sense on the dome to what that's like. If you kind of think of it that way, oh, look at that. He actually got a fill there, and that's turning into a pretty aggressive inflection point right there. I don't know why, but somebody really likes 60 and 61 both ways. So let's watch that and see who wins. I have no bias, but that was really aggressive, and he put it right back up. So, it's kind of icebergish, but yeah, see, they got him. I don't know. This oil tends to blow up on these things, so I'm not interested in being long or short yet. I'm maybe interested in like fading up there somewhere. So, it's right now it's a really efficient auction. I mean, they're doing a really good job of value here. Look at how symmetrical this is. Out at the extremes, there's some people planning to try to play that like me, although I want it further away. And further down here, God, that's almost perfect. 21 and 25 are the two extreme prints of volume here at these two price points. And that's really tiny considering the rest of it. So the odds are we have unfinished business there. For those of you that like unfinished auctions, odds are we're going to blow through this and then probably snap back. So that's a real, you could play that long on the breakout, and then you could try to catch the top and short it. That's the way I'm thinking right now. But it doesn't have enough upward momentum for me to try to get long. I would if it had a little more momentum. Yeah, pretty much, this is where I reset just the currents and I leave the totals because I want to see, you know, if there's a trend happening here in the delta, and there is, it's buying, but it's not really strong. Whoops, I don't want gold. Just grab my gold chart. Trying to navigate around all the Zoom windows that are in my face here. Okay. Okay. So where can we stick this? Let's put it right there. That'll work. Okay. So you can see, you know, the delta's moving up, the cumulative delta, and it's getting absorbed though, is my read right now. You know, there's this congestion area here. This is why it's not a good long, because it's you know, where do you enter? What's your exit? You know, you always got to think that way. I like the idea of this breaking out, but you know, it could pull back to down here and still do that. So where's my exit if I'm wrong? I can't game this right now. I'm thinking in bets and I can't put bets on it that work. So I'm not going to play it. That doesn't mean we won't in a second though. Remember, my gut is we're going up here, but the trouble with just getting in here long is you don't have a reasonable exit. You don't know where you would bail out. A tick or two, you could get burned on somebody just playing this range. Remember, we've been moving from 61, 62 here up to here. So dangerous spot. Again, there's some old topping over here. So, you know, remember my overall thesis here in oil is that it's trending up strongly, but it's been sold in the past. So I want to be really ambiguous about my opinion because you could argue this easily either way. But it's definitely approaching both an edge and a ledge, right? So here's where we are. There's the ledge up there. Let's grab another chart. See it a little clearer here. That's why it's a ledge. There's nothing else up there. So if it breaks out, we want to give it some room to run and then try to fade it. That's what we're thinking. And this is cool because we have a half an hour till the open of the New York for the indexes. That gives us a trade here. So you guys see what I'm saying? I mean, we can see the movement, but we just can't get a gameable trade out of the movement, even though we know what's happening and it's doing what we want it to. It's just there's no way to manage risk and reward, even though, you know, we're more or less right. So this is why. See, it's starting to fill back down. And I'm not going to jump in and necessarily buy that because remember, I'm trying to fade up here. So, you know, maybe back down here, but you constantly have to be doing this in your head, this, you know, risk reward analysis and watching the action and seeing if it fills the trade you're trying to put on. What you don't want to do is you don't want to try to make the setup fit your thesis. But being absorbed. Okay, yeah, again, you know, what's this language, guys? Absorbed. And yeah, I know there's lots of order flow chat with those terms, but you know, it's ambiguous. It doesn't necessarily mean anything. Yeah, we're going up and somebody's selling into it, but the second that stops, it's no longer being absorbed. So, you know, I just don't use those terms because I think that they're not accurate enough to be useful. Okay, so those of you trying to learn from the linear regression, you can see that we had a down range here that we're testing again. Remember I told you 61, 62, we saw that. Okay, now there's somebody on the bid right there and he's real because he is literally the offer right now. So he's saying, I'll buy those, and somebody said, I'll take them. So that's the, you know, that's telling you not that it's absorption, Jerry, it's telling you that there's just agreement. You know, the auction's happening and everybody's pretty convinced that we're at roughly the right price. Buyers are coming in and sellers are coming in and nobody's in control. That's how you read that. We're in the middle of two inflection points. Yeah, you know, but they're nothing near enough to worry about. We're in the middle. You know, we're always in the middle when we're anywhere near the middle, and that's always the same behavior in the middle. You never want to trade the middle. It's just, yeah, there's some strategies that work from the middle out, but for our purposes, just don't do it. There's nothing here that's tradable. You could say, oh, you could have been short up there. Now remember, the thesis is to get short up here. So again, it's just too hard to get an edge here with this kind of action. Good. That's why I'm doing it. And that's why I called this what I did, putting it all together. You guys now have seen the following stuff, and we'll just let that drift around for a little while. Okay. Setups we have done. We've done HMOMO, right? We've done the open 5. We've done the HV reversal. We've talked a little bit about flips, but those, if you just look at Momo, reversals, and the open, understanding edges, because we've talked about that a lot, you pretty much can trade for a living with just that stuff. Those are pretty basic, easy to understand order flow setups that happen multiple times a day in every instrument. So they fill all the requirements of good setups, and we know they work. We've been using them forever, and you guys have been watching them, and some of you have used them. So that's where your head should be right now. You shouldn't be asking me, let's have the spring and up thrust session tomorrow, because the reason you shouldn't be doing that is because you don't understand what I've taught you so far. And so giving you more information isn't going to help you. But if you're digesting what we've got so far, then when we get to springs and up thrusts, it'll just fit right in like a piece of the puzzle, because that's what it is. Why wait for a breakout attempt before thinking of fading? Because the order flow is two-sided here, Darren. Remember, what I was saying here is it's not so much that I don't like the idea of fading anywhere in here or getting long anywhere lower for a breakout. It's that there's no way to game that right now. Where's my exit if I'm wrong going either direction? It's too big a range and there's not enough momentum. So there's no edge here right now. Yeah, you could get in early, and then if you're right, you'll think you're a genius. And if you're wrong, you'll have a big loser. So don't get in early. Can this be used to do one-tick drills? One-tick drills work the best under the circumstances I showed you a minute ago, like over here in the NQ, where, it's the hard edge of a range and the momentum dries up. And, because remember, all you're looking for is for the odds to be overwhelmingly high that you're going to be able to get a tick. And when you get good at that, I've done the one tick drill for $1,000, $8 at a time. I have done that on numerous occasions. I strongly recommend you try it. See if you can make $1,000 one tick at a time, or even 500. That's Pete's parameter. Whatever. Don't just do it 2 or 3 times and think, oh, this is a cool drill. I made $20. That's not the point of it. The point of it is to keep doing it over and over and over. Edges on the volume profile. Okay. No. Okay. HVN and LVN. Those are high volume node, low volume node. Those are just simply bumps. Okay. Again, you guys are too caught up in terminology. Okay. This is a high volume node right here, because see, the volume on those 3 is higher than the surrounding area by a factor of at least 2. No, there's no magic formula. It's just, this is what a symmetrical profile looks like. So there's no high volume nodes. And then we get up here and we have one that's outside of the profile. And then we have another one up there. So that's what those are. Low volume nodes are insignificant other than the fact that they're low volume, and we go through them quickly. But again, guys, this is all the stuff you've heard everywhere else. So just stop it. I mean, where in my process do you see the term high volume node or low volume node? I mean, it's buried in there in the details, but at this point in the conversation, it's irrelevant. It'll be relevant when we get near one that sticks out. So, what's one like that look like? Let's see if we can find one. All right, yeah, here's a high volume node near the high of the day. Probably this, I don't know, let's call it 83.25 down to 81.5. And that's why you always look at the NQ and ranges. So that's a high volume area that might be a good fade later or breakout. So that's how you use those. Beyond that, you shouldn't even be looking at them. Yeah, that's one of Pete's standard drills, is the one tick $500. Yeah, all of you that are, actively trading, try it. It's a real good exercise to test your skill and to polish your skill. Look, any of the drills are good exercises. Any of the drills you find out on the internet that people have proposed, and they're all good for different things. The cut and reverse drill and the one tick drill and the blah, blah, blah. They all teach you different things. Maybe toward the end of this workshop, we'll spend some time talking about drills. I will tell you this. I have a sign on my desk that I will read to you. It's not one you've seen. There are signs on my desk you guys have not seen. And this particular sign says, make it. So in other words, just for non-English speakers, make it like that, and then a colon. Okay. And right after that, there are 4 items. And each one has some little on. First one is that, make it fun. Second one is that, loose. In other words, don't clench while you're trading. You got to be relaxed and just go with it. If you're too worried about how much money you're losing in a trade, you either have too much size on or you don't have a big enough account. So, and if you're doing one lots and you're afraid of how much you're losing, then you don't have enough money to trade. It's that simple, which is why you should be looking to get funded somewhere. But your mentality in the trade should always be about the quality of the trade setup, not whether you're up $5 or down $5 or whatever. That comes after the fact. Okay, so fun, loose. Then the next thing there is mech, and some of you will know that term, some of you won't. That comes from coding and gaming. The term is mechanical. So it has to be fun and loose, but it also has a mechanical sense to it. And no, not like Sommer wants to be mechanical. The mechanics of the art, like for example, in the high volume reversals, you have to wait. And a couple of you are starting to understand what that means now. That's the art, is understanding when to wait and when to jump in and when scaling is appropriate. So that's the mech. That's mechanicalness. All right. And then the last one I have on there is the word balance. And that one actually has a bunch of little subset parts. It says, it says sim, it says live, it says drill, it says test. Okay. That is all the different ways that I balance. So I trade live when I'm up for it and I want to make money, and I drill when I'm just practicing, like what I was just showing you, one tick drills. And there's times when I really want to be engaged in the market, but for whatever reason, I'm not comfortable with live money. I'm testing a new strategy, or maybe I don't feel well, or I'm in pain, and I've learned that I don't make good decisions in pain. So in that instance, I will go to sim. And so that's why sim, live, drill, test. That's what those are. So basically, this is kind of a way to keep my mindset correct, not so much within my system or my process, but it's just kind of about, if it's not fun, why am I doing it? If I'm not loose, then you get stressed. And that's that wrong feel thing, that's also in my process. The wrong feel rules. If you're forcing trades and you're sitting in a trade and it's going against you, and then you just barely get out of it with a tick, and if that's the kind of trading you're doing, that's the market's way of telling you there's nothing there for you at the moment for whatever reason. And there's my next reminder. We have 15 more minutes. I do that specifically. That one just said NQ. Put that back up for a second. This one, NQ open, no rush. I do that because the NQ, particularly at the open, can head fake a lot. And that's why I have this, always compare the Momo of the ES and the NQ, because a lot of times you can get a better trade in the ES because this is popping around too much, or the exact opposite. A lot of times the ES is just so, the bots are in there and they're just really working both sides of the trade. And it's just, even though there's a trend or movement, it's just so hard to get in the trade where you want to be. But meanwhile, over here, it's giving you, lots of ebb and flow. So you have opportunities to get into that trade. So again, always keep an eye on correlation. If you're doing that, all that stuff I just described only works if in fact there's correlation. If we're not correlated, then ignore all that, because then each index is behaving separately. By the way, the vast majority of the time we're correlated. And if you need, there's many of you that I say something and for some reason 46 years of experience isn't enough. So for those of you that are still in that camp, go to this website and knock yourself out. 98% correlation among the indexes right now. That's good enough for me. If that's not for you, then bless your heart, knock yourself out. Okay. We have a couple minutes. I'm going to go warm up my coffee. I will be back. I will answer this question. Yes. I don't trade RTY or Dow. No, that's not a true statement, Michael. I rarely trade them, so I have them set up this way. If I do decide to trade, and I've mentioned this numerous occasions in all of my sessions, there are set times when I will trade the RTY as a proxy for the ES, again, for the reason that the ES is so full of algos, it can be hard to get the trade off, even though you see the setup. And RTY behaves like an expanded version of ES on correlated days. So it will have the same patterns, but it will be spread out a little bit because of the way its ticks work. So often you can trade RTY as a proxy against ES. When I do that, all I do is I just swap it out. I just swap the chart that has this out, and these two will just switch places. So then I can trade it and see what the ES is doing. Don't do that enough anymore to worry about it, because I'm good enough at it now that I can pretty much get what I want from NQ or ES. But there are exceptions. RTY, when the market is really trending, is usually the one that trends the strongest. So, it can be a good place to trade. All right, that said, I'm going to stop here for a second. I'm not ending the session. I'm just going to mute myself and go warm my coffee. I will be back shortly. I was trading the ES and it was hard. I started after that. Okay, cool. That's, again, I'm showing you guys the results of all of my years, but I'm also showing you the results of what has worked for me teaching other people. Like last year, there's pretty much nothing in this setup that wasn't pretty burned into my stuff last year. There's a few things that are slightly different, but this methodology, I was successful in 19 out of 20 cases. It was almost 24. A couple of people dropped out that I was trying to help, and only one just is still to this day has no idea what I'm talking about, and she just isn't open to learning. Is my conclusion on that. She has a very rigid life structure, very religious, and I won't even name what religion, it doesn't matter. But the point is, if you have a very fixed mental structure about the rest of life and the world, this will be hard for you to do because it won't fit into those nice little boxes that, your religion or your parents or your community or your church or whatever tells you. It's just a different world. And, it doesn't mean you can't be in that world too. But if you take the thinking that, Catholicism taught you and try to learn how to trade, you're screwed. Trust me. Okay, I'll be right back. Okay, guys, I'm back. Yes, be water is absolutely the best metaphor. Bruce Lee was a genius. Distraction to focus on P&L. That's a great question, Darren, because there's two schools of thought on that. And, I'm kind of in Pete's school of thought. I don't focus on P&L, but I keep it in my face. There are domes that have P&Ls on them, and Ninja 8 does that in its domes. That's okay. And Day Trader does it too in Jigsaw. That's cool if it's on your domes. It takes up a column. If you have space for it, that's fine. But I just like to be mindful. I don't trade based on the P&L, but I'm here to make money, and my philosophy is a little different than a lot of people. And I think it's the right philosophy, which is, I'll take a trade for a tick because I made $8 on that, and this is $1.30, ignore that. That's using the wrong commission structure. And I have so many different commission structures that I stopped trying to set them in Ninja from different brokers. And I know when it's correct when my statements come. So anyway, so the point here is, you shouldn't, too many of you have this mentality that it was drilled into your head that, let your trades work, and give it time, and let your profits run. Nonsense, 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 nonsense. Again, you're here to make money. So if you get a tick and it looks like you may not be able to keep it, get the hell out of the trade, keep your tick, and move on. I mean, I know so many of you have had aha moments where you are no longer waiting for trades to work all day. Good, because again, rule number one, good trades, they not always, but the rule says they tend to work right away. There are trades that take a lot of time, and I don't mean the 5 minutes it takes for a HV reversal to form. I mean, if you're sitting in a trade trying to get it working for 30 minutes, guess what? You were wrong. Just get out. Jesus. I mean, I see people doing that, and I just don't understand what they're thinking, other than their ego is managing them. And one of the things I want to do at some point, a little bit about the psychology of this. We started touching on that, but you really can't get good at the psychology until you understand what you're trying to accomplish in the order flow. So it's kind of like that comes next. And that's a lot of that is about perfecting your execution with your feedback. Remember this? So that's kind of the stage that I suggest all of you that are starting to get aha moments focus on. Take the stuff you've learned and, where's your process right now? A couple of you have asked me for copies of this, and that's fine. I posted it. Feel free to print it. That's one of the things you get to take home with you. But the reality is yours is going to look different. How many of you have, serious chronic pain? Probably not that many. I've broken my back 9 times, and I've had 6. It's surgically repaired in 6 of those 9 places, and the rest of it is screwed. That's a really significant impact on my life. What are yours? That's what you should be doing for yourself here. That's where you should spend your time, Sommer, is working out your process. Then you can fill in the gaps later with seat time. I'm picking on you because you deserve it, but also I think it'll help you learn. So I'm doing it in good faith and in good humor, Sommer. Take it in that spirit. I've picked on a couple of other people here, and they have chosen never to come back to one of the sessions live. And that's really unfortunate for that individual because that person is losing out. That's why I'm doing it. You have a very rigid learning structure. I forget, but I think it wasn't your background engineering of some kind. I think it is. Anyway, and that's fine. You have to, that's your Bubba, but you got to understand the art. Okay, there's my big last reminder. Deep breath, go with the flow. Okay, this is when you really need to reset your head. Trading through pain, no, it does not work at all, Colin. And trust me, trading with pain meds doesn't work either. I've tried, everything from Advil to morphine and tried to work with it, and you can't. There are some cannabinoids, THC, CBD, that are useful in certain circumstances for pain management, particularly if you're trying to stay functional, because it's a lot better than narcotics, but that's a tough one. And, as you guys get older, you're all going to face that. So if you don't have it now, trust me, you will. Maybe not as bad as me, but you will. Okay, let's see. So here we're about to open in 5. So at this point, I really just wipe my head clear because, and remember, we are going to watch overnight ranges. We're going to have them all set up for us here on the 5-minute. But at this stage, I'm really not concerned with any price levels. Everybody listen to this. Okay, this is the open 5A we're setting up for. Okay, which is that new piece of breaking this into 2. The with order flow, scalp, market order, in, out, fast, that's what's happening here. That's what we're looking for. So what we want to do is we want to let it open, give it a couple of seconds to settle, and then see if there is an overwhelming bias. That is the first thing I am looking for here. And actually nothing else right now. I just want to, remember the open 5 setup, it's taking advantage or going with imbalances. Remember that from the very beginning of that presentation. It's all over the Slack too. There's that one paragraph about imbalances. Go back and look at it. If you don't remember, it should be like the very beginning of this. And it's one thing about Slack, unless I pay them for the big professional version, they don't give us a very good database, so it sometimes is a little slow. But if you go back to the very beginning of this, here we go. Okay, here it is. Open5 is a setup that jumps on imbalances in the first couple of minutes. And don't get married to 2 to 5 minutes. I'll sometimes jump on it in the first 15 seconds. It depends on the feel. So let's check it out. And there's always a little posturing that goes on like this right before the open. And sometimes I'll get in front of that and I'll put, if we're really at an extreme and I just don't think it's gonna break down, like here, you know, if I was thinking long, I might try that, but not with this tape. You know, if this wasn't at 88, if we were down like 68, you know, and down at a level that had been bought a bunch, maybe, but not here. So, you know, you can see why if you just look at the ranges. You know, down there I would have been interested in maybe jumping in front of that, but we're just two in the middle. So, you know, anything can happen anytime. That's my favorite thing to tell new traders. You know, things, all kinds of crap will happen. I was trading live on 9/11, guys, and I was on my treadmill watching TV, and at first they thought it was a private plane that hit the World Trade Center. And bless my heart, I got really lucky. I was short, and I got locked short when they closed the exchange, which is the best thing that could possibly happen to anyone. And I made some money, but you know, I was just watching that going, what's going on? You know, nobody had a clue that it was any kind of big event for the first hour, you know, and then the second plane, and then we're like, wow, 2 planes, you know. Meanwhile, the markets just had no idea how to game it. So anything can happen anytime, literally. Define an imbalance. More buyers than sellers or more sellers than buyers. That's an imbalance. There was some conversation in the Slack about this. One of the words I think tossed around was pressure. I think that's a good way to look at it. An imbalance is pressure one way or the other. Right now, there's no imbalance. We are literally drifting in the auction with no price discovery going on whatsoever. Everybody's happy with this price. Of course they are. We're opening in a minute. So that's the only, that's it. No imbalance. We're balanced. We're at value is another way to look at it. Yeah. No, the POC's up there. The VWAP's up there. Who cares? Those are statistics, guys. Those are based on the past. In order to be a VWAP, an average, there must be an averaging period of time over which it's looking to create an average, which means it's going back in history, which means it's not nearly as significant as all of you guys think it is. I hope my sarcasm is getting through to those of you that marry things like that. Although there's less and less of that going on. I'm digging that. All right, and here's the open, and here's the reset. There's the new profiles. Boom. Okay. The beauty of doing this is we get, you know, the ranges build as we go. That's why I like to run those profiles fresh right out the open. And this is the head fake portion of our program, you know, when it's going to go both ways. And the reason it's doing that is people are trying to see which way they can push it. You know, and it's not collusion. It's not the big boys. You know, the big boys act together by accident. They'd much rather take money from each other. Trust me. If they're all going one way, it's because they're afraid to go against the tide. And right now, what's happening? Nothing. Don't interpret that as down yet. It's not far enough away. That's why you're always comparing this to this. And now it's almost there. If you want to compare what's going on with our linear regression, you can do it over there. I'm primarily watching the NASDAQ. That is kind of my default place to play if I'm going to. Okay, this is starting to look like a bid now. So I'm going to see if we can get long in that. That looked like that had a lot of energy. That's just my gut. Okay, we are long one. And let's see if we can scalp out of that guy and buy some more down here. Oh, look at that. Well, this might not be as good as I thought, but I'm still thinking it's a long. Let's see if we can get that one filled. Okay. See, now we're working with profits, guys, and that's how you can get a really high win rate. You know, you just boom, okay, we got one there. Let's see if we can get this one profitable. Boom, okay, so we just got 2 long scalps there. We're trying to catch another one. We're flat again. You see what's going on here? Okay, I'm going to pause for a second. You see what I'm doing, guys? Sommer, this is what you wanted. You're not going to get a lot of this. So ask questions when I'm doing it. By the way, you see, I just canceled that order and I decided I don't want that long anymore. Why? Because the pressure's down now. Look at what's going on here. It's not this overwhelming buy side stuff. So I picked off a couple of longs and now my brain's back to I have no bias. And, you know, we're making a little bit of money there. Again, these are 1 lots. You know, you could do that all day and make a couple of grand, or you can make 10 lots and do this for an hour and make 10 grand and then go home. Good trading scales perfectly as long as the market's liquid enough. And both of these are as liquid as any of you can afford. In other words, you know, we could be trading 10s here and I would be getting filled just as nicely. Okay, this looks like a long, but I'm a little suspicious. It's chopping and if I was already long, I'd ride it. I'm not going to jump into it here because I'm trying to teach too. See how there's big guys hitting the tape on the sell side? That's my caution right now. I wouldn't chase this and it's too far away. We're building another bulge here. So, you know, maybe down here is a good spot to buy. Maybe you try to buy right there. But if that's truly, you know, selling entering there, then it's really a short, not a long, you know, so that's another way to look at it. And you can kind of watch your LRCs to game it real time here. You know, you can see these ranges developing and the range within the range. I don't like that anymore. So you see how I'm just, you know, constantly rolling the dice and figuring my odds and which way am I going to make money. And, you know, this will be useful for you to learn, but you'll get much better at it if you just watch it here. You know, everything that's going on here, I can see here much faster. I can reset those and instantly see if they're lifting the ask, and they're not. So, you know, the net is about even and we're just churning. You know, I'd say odds are we're just going to fill in this gap up here. You know, some of these low volumes will fill in and it'll get symmetrical. So right now we're looking at a range day and I'll fade the edges. That's my conclusion. Nothing else to see. Notice how this requires reasonably fast decision-making skills. You know, I'm not sitting here pondering or looking at a chart or step 1, step 2. I'm seeing something and I'm making decisions and I'm kind of, you know, I'm not predicting, but if I truly think this is a long, then I should be really interested in buying at those 2 spots, certainly. And if I'm not really interested, then, you know, I shouldn't be. So I don't have a real good feel at the moment for which way this is going. I like the range edges, so I do that a lot, by the way, where I kind of poke orders in like that and just, you know, see if I get filled. That's why I use 1 lot so much. And you saw there I had a 1 lot, but then I immediately doubled it and was trying to get it up to 3 or 4. You know, if you get going in the right direction, there's another reminder, pause, take a deep breath. Always a good idea. Again, this feels long, but it is struggling with what? It's struggling with that ledge up there. And, you know, all-time highs, people tend to sell into those. So this is a classic battle between order flow and technical analysis. And when you have that battle, order flow always wins. It's long, but, you know, again, you've seen me numerous times try to get into this, and the thing you're thinking here is not, oh my God, I'm going to miss out. Your thinking is, if I don't enter this right, my risk is way too big. I do not want to be getting long up here because I'll get stomped. You know, I want to at least try to catch a pullback because of this action. It is not strongly in one direction or the other. So, you know, if you're going to take a direction, make sure you at least get a good entry. Again, it's overwhelming ledge breakouts. You know, these are both small and there's only a couple. Odds are it's going to get through here, but, you know, when and from where, that's the problem. You know, again, you could try to buy down here, and maybe a better idea is buying, you know, down there. You know, that's how I kind of do that. I'm telling myself what I'd like to see happen, and then if we start to get there, see all these sweeps going over here, that's taking new highs into the ES, which is bullish. We're at the top of the profile on every one of the indexes. So your bias here is clearly long. But again, you know, where? Manage risk. You know, it's not about how much money can I make. It's about how can I not lose money. If your trades are good executions, the profits will take care of themselves. You want to be concerned with not losing money. That is your only concern. And that's the trouble with this setup. It's a perfect ledge, but where's my stop? If I bought it here, it could pull back to here. And so, you know, it's probably going to go right now. And I'm not interested in fading it at the moment because there's not, if I see like 16 and 10 and that stretches out over a bunch of price levels, then I'll consider fading it. That's an extreme. This is not. This is building up off of this high volume node long. So, you know, if anything, this is still long, but where's your entry, you know? If you happen to just be listening to me and got long here, and you still are, I'd probably sit in it. You know, I wouldn't let it go against me, but if I'm long from down here, I'd probably give a little bit of room, maybe add to it if it pulls back and doesn't interest a bunch of sellers when it pulls back. And that's kind of what it's doing here. See, if we, okay, that's the delta right there. It's negative, but the price isn't going down. That's the clue. If you have negative deltas at a top and price doesn't go down, that's the battle between technical analysis and order flow will win, I promise you, and there it goes. So, you know, I had one person I was mentoring and she said to me, how can you predict the future like that over and over again? I said, it's not. I said, pick up David Weiss's book, Trade's About to Happen. That's what it is. You know, Wyckoff is a really, really good basic kind of order flow methodology from the turn of last century, like 1915, guys. But you know, there's a lot of cool theory in there that you can use to just understand what you're seeing, because it never changes. People are always the same. All right, so this again, you know, the longer we stay up here, the more likely it'll break out. But you know, that also means more people are selling into it. You know, if you look at the delta bars here, that's often helpful. Overwhelming buying, holding the open 5, but not a lot of energy. Same story, holding the open 5. So the open 5 high is kind of our inflection point of the day at the moment. That's another thing I do. I kind of look for whatever the most significant point around is. And right now it's that. I used to have a thing that put the open 5 on my domes, and you know, you can do that. There's a column, the alert column. I think I showed it to you last time. It takes up too much space. So I don't do it anymore. But there is a column here you can put notes and things in. If that floats your boat, it's called the alert column, and you just do that, and there it is, and you can make it as big or as small as you want. And then, you know, like I can check price levels and say, you know, that's a that, and that's a that, you know, whatever. So that's, you see, it's putting those in there. Anyway, I don't use it anymore, but I think it's useful if you're learning. So let's show you that. Okay. How do I manage to look at the charts? I don't, Michael. I do not use either of my screens. Remember what my desktop looks like. Okay. I'm just killing time here waiting for something to happen, but I want you to see this. So where did that go? Here it is. Okay, this is what my point of view is for everything, okay? So I'm seeing this on my middle monitor, and this is on my left monitor, and this over here is on my right monitor. And what I'm doing right now, this time of the day, I'm not paying any attention to these at all. I'm just watching the middle. So that I hope that answers your question. Okay, here's my next reminder. What's the open 5 bar setup look like? So basically what I'm asking myself here is, what's this behavior? And I just described that to you, so you get that. And is there an opening drive here? You know, guys were talking about that. That's just an open 5 that just keeps going. That's all it is. And no, we don't even have any kind of momentum. So is there a flip? Now, in order for there to be a flip, we would have had to have a big overnight move. So are we consolidating? Well, I don't know how else you'd want to describe it. It sure looks like consolidation to me, in which case I don't like those orders anymore. So cancel those guys. I mean, you know, if you put it in the context of the overnight, it could not be more of an inside day. This is called an inside day, where the action is within the action of the previous session or the previous day. And this is the most useless pattern on the planet. It's the middle of the middle, and you literally just, there's nothing you can do here. So, you know, again, my default is I'm flat. I'm kind of surfing for opportunities. What does that look like in your process? What's this right here? Okay, self-analysis, mental rehearsal, we did all this. Okay, now we're at this low-risk idea and stalking. So we're constantly looping right in there. I'm looking for a low-risk trade. I'm not finding one. If I find an idea, I'll try to put it on. So that's what I was doing earlier when I was putting orders down here or down here. What I'm trying to do is get a low-risk long at the other end of the range and see if it plays out, because I don't have a lot to lose if I do that. You know, a few ticks each way. In this case, I probably won't try to do it with limit orders. If we had more momentum, I would. But with this kind of market, I'll just pop in and hit the bid or the ask if I want to fill it. Right now, I don't know. That actually could be a long here. Maybe. Order filled. Let's just play it. Order filled. Okay, we just made 2 ticks that fast. I mean, I don't know how else to show it to you, Summer. You know, that was a 1 lot. If that was a 10 lot, you just made enough money. You just made the day. You know, that's all there is to it. I saw the pressure and I jumped in. I'm not expecting it to break to new highs. I just saw an opportunity to grab some ticks. It's that simple. I don't know what else to say. Okay, LRCs are so fast. Yeah, LRCs are very fast. That's the whole point. You know, they're constantly gaming the range. Again, you know, Dr. Shah and Jiri and all you guys, you know, thinking these are trends. They are not trends. They are just ranges. So right now the gameable range is 55 to 49. We're working the bottom end of it. That's interesting. If it gets a lot lower, I might be interested in nibbling long. But right now it's the middle of the middle with a slight downward bias in the order flow. Remember how LRCs work, Jerry. It's really important. Thank you, Dr. Shaw. Good. I'm glad you understand. If you take the center of this range, draw a line down the middle, and then all you're doing is taking 2 standard deviations of the price plots and sticking them in a box. That's all this is. So it's not so much a trend as it is showing you the level of interest within the range. And so yeah, they move fast, but they also are constantly giving you an idea where the pressure is. And right now, you see we're bottoming is the way you would read this. It doesn't mean we're not going to keep going down, but as long as that range turns sideways, if it can break up here and start to go up, then it's invalidating the range and we're going to start moving up even more. Or we're going to reverse. And the key to that is to look at the volume numbers. Okay, the volumes up here are high. And excuse me, the volume down here are high, so we're getting more selling, and the up thrusts are lower volume and they're getting hit. Now that might be an exception there. That's why I changed colors. It might be turning, it might not. Again, you know, once you understand what you're looking for, it's a lot easier to see it here. That's why the dome is really where it's at. You know, I don't have the LRCs on my set of charts anymore. The ones I'm using for the workshop, I do. But, you know, I don't even look at the chart. Again, 90% of the days I just turn my monitors off on the side and I just watch this. And you could have, by the way, you know, while I'm talking here, there was a dozen order flow scalps for 2 or 3 ticks that just happened in there, both directions, mostly to the downside. But you can see the pressure here on the downside, and this is running negative. So, you know, moves up that are suddenly getting sold are really good places to jump in short, with the exception that we're at the edge of the range and we're attracting buyers. Let's see if they get sucked up by the sellers. So far they are. Look at that number going up. And, you know, watch the delta. The cumulative delta is too slow to be useful here, but the trend of it can kind of give you a sense for what's going on. My gut's still that this is a range day. Remember, most days are range days, so you know, collect information. And if you do have a range day, they're the way to make a lot of money. Because you know, let's say this becomes the range. It may not, but let's just say it does. 58 to, you know, say 38 here. Most days that you have range days, you know, you can be pretty low risk buying around the lows and accumulating a little position down there, and you know, selling as it gets toward the middle or back to the other end of the range. That is the classic behavior of a range day, and that works great as long as we don't break the range. That's the danger, and particularly the danger of scaling into that type of setup. I told you I'm still working out the parameters for gold scaling. I've been doing it in the NQ and the ES long enough that I pretty much have it down. You know, I can go from 1 to 50 and be comfortable. But in gold, a couple of times I got burned on 10 lots, and so I'm still playing around with how to scale that properly. it's relatively new that I'm even trading gold. I think I told you guys I just started doing it in futures about 6 months ago. Just saw some opportunities overnight that I liked, and I've been posting in the group a lot about that. That's that overnight, 6 p.m. my time, Asia opens gold trade. It's a range trade on these little tight gold ranges. And as long as you're in there, you can make a lot of money. But when it does break out, it gets pretty wicked. God, it's almost like gold isn't trading. I mean, it's that quiet. Look at this. A little bit of action picking up. Okay, so we'll give this just a little more time. This is a really long session. It's going to be a whopper recording, but I think there was one other news event I wanted to. Yeah, Powell's going to start testifying. That was fun. If you watched it yesterday, as Lee mentioned, I think as the algorithms were gaming his words, it's exactly what was happening. They were just in and out. You could have scalped it for some good money. Okay, so here you got the bidders coming in again. See the energy? You can just see it coming in. The meters show it. See, it's just. Now those are perfect scalps. Right when I started saying that, you would have been long here, and you get a point and a half, 2 points, $40, $50 a contract. You could do that all day, guys. All right, questions. I'm going to pause for questions. Okay, yeah. Anton, unless you can find a gameable thing to work with the option expirations and with triple witching and all that, yeah, it's something to keep in mind, but that's it. How do I determine the range on the dome, Michael? By watching the range on the dome. It's that simple. So, your LRCs right now are your cheat sheet. It says 51 to 48 or so. Well, duh. Remember, I just said 47 was an area that I would have been looking to buy. And 51, well, that's the spot it's been selling since we opened. That the top high volume node, it just can't get above that. So, these are useful, if you go to the bathroom and you come back and you want to see what the new range is. But the art, again, it's just, if you just watch it, you'll see it. And also that's a useful way to use the resets. I often do that. I'll reset the range I'm watching with the current trades and leave the totals, and it builds me a footprint right there on the range I'm watching. And that's all I need. I don't need the chart. I don't need the LRC. I mean, it shows it to me as it's happening. What if the algos read your 10 lot order? Okay, here we go again. Let's talk about how algos work, guys. Algos could not give a flying fuck about your order, David. They are trading their code. All they are doing is trading their code. Your little 10 lot is useless. It means nothing, okay? If you don't know how algos work and you're going to comment on them, I strongly suggest that you go and you read that article I posted. Oh, I don't remember where it was. It was either in here. It's about algorithms. I don't know. I think I announced it too. It's Algorithm 101. Anyway, it's in here. There it is right there. Okay. Algo 101 trading for dummies like me. I posted that for your edification, David. So if you haven't read that and you don't know what I'm talking about, then why are you asking me questions? And yeah, I'm picking on you guys because, do your part, people. This is like a graduate level university course. I'm not going to handhold you and spoon feed you. I post something in the Slack because I want you to read it. If you haven't read it, then you're not keeping up, and you shouldn't be asking me about anything. It's that simple. Okay. No worry, David. Just please, keep up. I know you got a full-time job. Do it. You got a 4-point long in NQ. Cool. Nice. Okay, let's see. The main concern for me when I trade in the morning is when you get the feel of the pressure of buying or selling is a question of experience. Yeah, it's always a question. That's what seat time, the term I keep using, seat time, Helios, is, you learn, and every instrument's different, and every time of the day is different. And the only way you get a sense for that, no fool is going to sell you an indicator. It's going to show you that. And, there's some guy selling a really comprehensive order flow Wyckoff thing called MBox Wave. I don't know if you've ever seen it out on Twitter, but he promotes a lot. You'll see MBox Wave. If you just look through any of the ESs or NQs, you'll see them. So just scroll through those sometime. Anyway, that's a platform that integrates everything that kind of we're talking about. And it's like $2,500. And all it does is like, when it sees an indication of the setup, it paints something on the chart. But the problem with that is if you need a $3,000 or $2,500 program to tell you that, then you don't understand your setups, because the art of seeing them comes from the seat time. And so, people think, oh, I'm going to buy a toolbox that shows me that. No, 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 no. What that guy has done is he's coded up something that works based on the way it worked on any given number of back-tested days. And it might be useful. Looking at that code, I see it basically kind of integrates everything that I do into one little screen. But, I asked the guy if he'd let me look at it in a trial, and he agreed. And I guess I get what he's trying to do, to sell that to people that don't want to take the time to learn this. But I guess my point is, you can't do that. I mean, that platform may give you better signals if you're a rookie, but at the expense of the seat time and truly learning price action. And I think that's a horrible trade-off. So again, this is not a critique of Mbox Wave. I actually think it's decent code. It's just that mentality of finding an indicator or an automated strategy that will do this for you is really missing the point. You can build your own tools, for example, that can help you find those low one ticks. That's a really good use of something like ADL in Trading Technologies XTrader. But learn what's actually happening. Don't worry about the toolbox. You can always use tools. There's always tools out there. New stuff comes along all the time. It's the wrong way to do trading. Exactly. That is exactly the wrong way. Okay, seat time. Yes, Amy. People always ask me how much seat time is enough. The answer is yes. I mean, there's somebody that lurks around the group sometimes on surfing, who's somebody I mentored a while ago, and she's on year 3 of seat time, I think, and is struggling, and that's fine. Everybody's path is different. But I think in that case, there's something else going on there that is inhibiting learning. So, that might be something to ask yourself if there's something in your makeup or your experience that is impacting you. I know Maria said that the idea of your significant others or your family not understanding what you do hitting home. That should hit home with all of you. If you have a significant other or a family that does understand this business, then you are the 1% exception. Nobody gets what you do, and they never will, and there's no sense trying to explain it to them. You are a professional speculator. That's what I tell people if they ask me. I'm a professional speculator. What does that mean? I make money by taking bets that I think I can win, where the odds are in my favor. Isn't that gambling? Sure. If that's the word you want to use, fine. If it was truly gambling and it was truly random, then I wouldn't be able to make a living at it for the last 46 years. That's usually the end of the conversation when I make that statement. So, if you can make that statement and say, well, if it was gambling, I wouldn't be able to make a living for the last 2 years, then you're on the right track. But if you're saying, well, if it was gambling, I wouldn't be able to make a living for the last 2 weeks, you're not paying attention. Okay, you need more seat time. An answer for your wife. There is no answer for your wife. Again, no, it doesn't have a bad reputation. It has a bad reputation by people that don't understand what the word speculator means. Yeah, people that think that oil speculators drive up the price of gasoline. There's a lot of morons in the world. You have to just learn to ignore them. Everyone has at least one opinion, usually 2 or 3 that all contradict themselves. That's human nature, folks. I happen to have a bias in this respect that helps me, but it doesn't make me particularly popular. But listen very carefully, guys. I personally believe that 90% of the population are really friggin' stupid. Dunning-Kruger, if you don't know what that is, look it up. Most people, in my opinion, are not smart enough to realize how stupid they are. Yeah, that's a really damning statement about the human race. I'm sorry, that's what I believe. So if you take that and you listen to me, everything I say makes sense. I assume everyone's a moron, and I'm not talking about you guys, I'm talking about the world. So if you put that into a trading context, my natural instinct is to take any secret indicator and assume it's wrong and to find exactly why it's wrong. And so that was kind of my mission for about 20 years, was just going out and attacking Furus. And I still do it on Twitter. If you follow me, every now and then I'll just pick one and I'll attack them for 2 or 3 days and just rape them. There's a guy, a levels trader. I was going after him last week, and he's been a good sport because I forget what the name of his account is, but it's something like I don't know, trading with fibs or something, but he doesn't use fibs. I was like, what's your problem? Turns out he's a pretty experienced guy and knows what he's talking about, but he's still a furu. He's selling memberships to a Discord channel. You know, if you see that, run away as fast as you can. Okay, they talk down on, okay, again, you guys, speculator is a bad word. There's people that talk down on it. They don't understand how we speculate. Again, trying to explain it to them is a waste of time. They don't understand it. Now, there's one of two reasons they don't understand it, guys. They either are not smart enough, and this takes a reasonably high IQ to get this stuff. Now, that doesn't mean necessarily you're a straight A student in school. I mean, it takes comprehensive learning skills and critical thinking skills. That's not book smart, that's world smart. And, a lot of the people you're talking to have very traditional views. That the right thing to do is go to college and get a good job. And they don't understand that paradigm shift makes that not a reality anymore. Particularly people in my generation, boomers, they think that, the millennials are just lazy. But, I've worked with a lot of millennials. I've coached them. I've trained them for Microsoft. People working 3 jobs and still not able to, get an apartment. So, it's not the same world. So you seriously there's nothing to be gained by having a conversation with those people at all. And again, I tell you exactly what I say to them. What do you do? I'm a professional speculator. What does that mean? I make educated bets in markets. Oh, how's that working out for you? Well, I've been making a living at it for 7 figures for 46 years. How's that? The conversation ends. So, the proof is in the paycheck, guys. Just stop having conversations with your spouses, with your friends, whatever. It's just not going to get you anywhere. But when you can take them all out to dinner, trust me, they'll notice. And that's all I can say about that. I know a colleague who put a huge sum in a stock and is down 30% and he still does not want to buy. Yeah, exactly. Jerry, that's a good example of people that trade stocks, like my friend and mentee who bought PG&E because it dropped 30%. He's trying to do a value play and he doesn't even understand that that's what he's doing. He's so naive with markets. So, again, for anybody that's trading stocks and doesn't automatically have a 10% stop loss, they're a moron. They qualify for what I just said. They are not intelligent enough to realize how stupid they are, because that just should be automatic. If you are a swing trader and you enter a stock and you lose 10%, you should get out and rethink it because you're wrong. It's just that simple. So again, yeah, there's so many, you'll run into people every day. There's people on Slack that say you need 10 plus levels on the dome. Okay, Steve, that's a good question. Yeah, you're missing something huge. I have 20 and that's rhythmic. And I also have CQG, which is only 10. And, I think Dennis G said this in my group in surfing, that you feel naked without it. And the answer is, yeah, you're only trading right around it, but you need to see the psychology. And remember, most of the time, big spoofers put up spoofs. They don't put it within the first 10. They put it just outside of that so that guys like you can't see it. So no, you're interpreting that completely wrong. You want to see as many levels as you can, but you want to know that they're not significant. You want to understand the gestalt. Again, you guys have heard me say that word 1,000 times. If you haven't Googled it yet, you need to, and you need to really understand what that word means. Okay? Google gestalt, everybody. We'll stop and do it together because not enough of you are doing it. What is gestalt? An organized whole that is perceived as more than the sum of its parts. Key phrase. Okay, 701, GC and CL. I always forget to look at them, so we're going to go back and look. Take a deep breath. We forget to breathe when we're trading. I do it all the time, so don't do that. Remind yourself. Okay, let's have a look at what's going on. Oh, so gold's working a range, but it's still too tight for us to trade. There's just, a tick is $10. You can one tick all day over here in gold. It's a great place to do one tick. But this is, is too bulgy. There isn't, you know, this range has room to extend down before it's truly a range, so I'm not interested yet. Oil, same story. And this is the same story. We have yet to have a change in the story in the indexes. We have a bullish scenario because we're holding the open 5 high and we're building a volume profile up there. But within the grand scheme of the range of the overnight and the previous day, you know, it's meaningless. So there's nothing interesting there at all. I want to see something more extreme before I'm going to play. Other than, you know, momentum, you could be scalping this for 1 lots, you know, or 3 lots or whatever all day. 3 tick. Oh, wait a minute. We might have cut shot. This could be the, oh, just for fun. That's a real choppy spot. Okay, so, but you know what? This is my sense here. I'm just showing you something. I'm giving this a real-time view of my sense of the flow just to show you how I would read this. I may lose some money here, but again, you know, how much could you lose? It's a 2 lot in NQ. And would that scare me? Yeah, this is right about the point where I'd bail on this trade, but I'm trying to make a point. I think this is a range that is tradable. See, I didn't even look at that. I just went over there to get that for those of you still using those. And see, it's confirming my thesis. I would have added down there maybe if I wasn't talking. Oh, and let's just see if we can scalp out of here with 25, 30 bucks. We should be able to. It's getting sold here, but the buyers are winning. That's basically what's happening. But I can always jump out flat, or I can grab a closer price, you know, if I want to take a tick on the first one. Okay. Boom. Okay, there it is. So, you know, literally, guys, you can do that all day. And this number goes 50, 100, 200, 300, 500, 1,000. Dr. Shaw asked me about this. I showed him privately one of those from one of my days. It was 1 lots and it was $3,800 of profit. I posted that one in the Top Step group about, I don't know, a couple months ago. It was back in August, I think. There's no reason you guys can't do that. Every one of you should know enough to be able to do that now. So that's what I would be doing if I were you. And see, there's the breakout we were looking for. Remember, I was long. I could have played this. I'm not because I'm talking, but you know, am I on the right side of the market? Did I read the order flow right? You know, when I added to a loser there, was that adding to a loser? No. That was what? Class. That was Jeff doing a range. He defined the range. Order flow was saying to buy it. So he didn't add to a loser. He got an opportunity to add to a range trade at a better price. Does everybody understand that? Good. I see lots of yeses. Okay, so why is my win rate so high? Now you see. I mean, I literally, I don't think we have a loser here. If we do, it's a tick. Yeah, okay, so we have a tick and a commission, okay? So that's how you get stats like this, and that's not even good for me. You've seen I'm usually 85 or whatever. Obviously, we're just getting started here, but you can see these numbers are going in the right direction, right? That's how you do it. That's what you were asking for. You got it. Okay. It is now 7:04. I have been talking nonstop for 2 hours. I am done talking. You have 5 minutes to post questions in the chat. I will answer them and then this session will end. So post questions, typing them right now, please. I know it's what you were asking for, Samer, and I purposely haven't done it until now. Why do you think that is? I'll be right back, guys. Questions, put the questions in the chat. Hey guys, I haven't gone yet. I'm coming back, so please do continue to post questions. But I also wanted to ask one other thing. As I've mentioned in passing a few times here, there's a reasonable amount of evidence that somebody is in our group that hasn't paid to be here and is kind of cribbing what's going on and somehow getting into some of the Zoom meetings. I believe that somebody else who is a paid member here has shared information with a third party. So if any of you have any knowledge of that, or if that's you, stop it. I'm aware of it and I will get you, and you won't like me when I do stuff like that. I've been in IT my entire life. I grew up building computers when I was a kid. I had an IMSI box on my desk when I was 10. You're not going to hide from me on the internet. Trust me. Okay, I'll be right back. Okay. I see some questions coming. Good. Steve, are you being sarcastic with the question? You're not even looking at current bids or offers. That's exactly what I said to do. Okay, can you clarify your question? I'm not sure I'm understanding it then. What do I mean by levels? All right, so I'm going to unmute you, Steve, because I'm not understanding your question at all. Can you ask it out loud? Hang on a second. Okay, let's see. You're unmuted, Steve. Go for it. No, now you're muted again. Hold on. Silly platform. There we go.
Can you hear me now?
Yeah, go ahead. All right.
Okay, maybe I don't understand what you or they are talking about levels. Do you mean levels of bids and offers, or maybe I'm just confused on the word levels?
Yeah, when I use the word levels, I'm referring to price levels and people that like trade price levels, and I don't do that. What you may be referring to is, are you talking about levels in here, prices here, like high volume nodes and low volume nodes? Is that what you mean?
Well, like when I trade, like I just look at the levels, the prices right around the current price.
Oh, you're okay. You're back on the question about your data provider.
Well, like there's somebody on Slack that says she needs like 10 plus levels.
Okay, I already got you. Okay, and now I understand the question. Okay, what you're talking about is these things right here.
Oh,
So different here. I'll show you right now. Different data feeds will do different levels. So I'm going to turn my data feeds off. So hold on a second. I'll turn them both off. The two that are running in here anyway. And okay.
Oh, I see what you mean.
So
yeah.
Right now I have no data coming in. So when I restart it with just CQG, okay, it's only going to show me 10 prices from the current price. So let's let it come up and do that. And you'll see what I mean. Because CQG does not support the full book of the CME, which is 20 levels. All right, let's give this a second to reset because it's got to go, and you'll see this refresh.
Yeah, I understand why those levels are important. I thought they were talking about something else.
Okay, that's what they're referring to. So you're going to see here, they'll come up, CQG comes up with just 10, and then, yeah, see it over here? These are just the 10.
Yeah, I see what you mean. Okay.
And then I will turn on my Rithmic feed as soon as my computer catches up with me here. By the way, this is a really fast machine, but my new one's even faster. So having the fastest computer you can afford is important.
Yeah, I thought they were talking about, okay, I got you. I know why that's important.
Yeah, okay, so hang on, let's let this all catch up here.
Yeah, I see that. Yeah.
All right, so I'm going to mute you and continue answering the question.
Okay.
All right, give my platform another second here to catch up, guys. It's just running the Zoom feed is and voice and all that, and we're recording. So this is just putting a lot of strain on you can see that's my CPU meter down there. So, and this is an arrow problem because the arrow interface is turned off by Zoom. So just let it catch up here. And then I'll show you, see, so now we're on the CQG feed and all we're getting is 10 levels. So that's a good example. And then if I turn on the other one I don't know if I turn on after the fact, if it'll do it, I don't remember because I usually turn them on the other way around. but this is the rhythmic feed, and it's also it's top steps. So at least what I do with them, I do in rhythmic. So it should do that now. If I turn off the CQG, it will definitely do it. But you should see it expand out another 10 levels here. Because I was trying to show you CQG, it might not do it. I do it the other way around. I start rhythmic first. And I think that might have caused it not to work here. So let's see. Yeah, see, now they're both connected. So it won't do it. But you know what I'm talking about. So we'll disconnect them both and then restart it again. Okay. Come on. All right, so we'll let that, that's going to take all that time to reload. So let me look at other questions while it does that. That is the answer to that. Okay. Yeah, piracy is a big, trader PD. I don't know why people are assholes, but they are. And they also are Dunning-Kruger stupid. Okay, let's see. There's no other questions, really? 2 hours worth of material? Wow. Okay, well, I guess you guys are. Yeah, Helios made a really good point that because that my thinking about that trade was a range trade, I wasn't looking at that as just a pure scalp. So, it didn't go against me. That's not what it did. It came back to the position I really wanted to buy it. And, and you saw me doing that all morning when I was giving you examples, sticking those limit orders in at places that I would like to nibble. That's what I was doing. So good. Okay, I'm glad I said, so you get that. Good. That's the point. We want to see more of that. Okay, now you can see, so since I started my rhythmic, you can see I'm getting 20 or the 10 levels each direction instead of just 10 total. And, believe it or not, it does shape your perception of the market. It gives you a sense, and there are people that will take advantage of that 11th level, like I said, because they know a lot of people don't think it's worth paying for that, which is an important lesson in and of itself. Conventional wisdom's wrong always. And the second part of that is, understand the depth of what you're trying to do, understand the logic behind what you're trying to do. And then all those decisions become really easy because, you know what information goes into the thing you're trying to discern. All right, 2 hours and 14 minutes. That's about all I got, guys. And I don't see any other questions. So that will be it. You have 5 seconds to get any other questions in while I take my hand over to the end button. Okay, guys, good. Thank you. You're all welcome. I hope it was helpful. Greg Galloway, you've been relatively quiet. I see you're there. Interested in some feedback from you at some point too. All right. Thank you, Amy. I will see all of you guys later. Have a good trading day.